We would call on Congress immediately, to the degree that they are prepared to be helpful, that they immediately lay down with us an economic package in order to assist Ukraine. We think it's very important for the international entities, the OSCE, the UN, NATO, the North Atlantic Council, the EU Foreign Affairs Council, which will meet tomorrow, all need to weigh in, and I believe they will weigh in heavily.
You say John Kerry right there. Also, this just in from Reuters right now, the U.S. Reportedly preparing sanctions against Russia, but of course Reuters reporting that those sanctions would need firm backing from the European Union as well. There you see it. That is coming to us from Reuters. Of course, John Kerry traveling to the Ukraine today as Western leaders prepare to respond to Russia's seizure of Crimea. The stock market reacting already to the impending threat of war. Oil, wheat, and natural gas prices soared over fears that Russia may curtail supplies to Western Europe. Both Russia's stock exchange and its currency, the ruble, suffered record losses as an emerging market sell-off swept the globe. Joining us right now via Skype to discuss the financial implications of Putin's threat of war is author of the Aftershock book, Bob Wiedemer. Bob, it's great to have you with us.
Thanks, John. Good to be here.
All right. Now, could Putin's apparent willingness to send troops into Crimea and into perhaps Western Ukraine be a deliberate ploy to boost oil prices, which drives the Russian economy?
Well, I'm not sure it's deliberate. Obviously, I do think it's more related to the Ukraine unrest we've had in the last few weeks, but it sure has worked. Oil's at $105 or close to it. So I think, and that's probably going to stay that way. Obviously, a lot of uncertainty in the energy markets in general. But no, I don't think it's ploy. I think it is definitely due to the Ukraine. And the Black Sea Fleet is clearly based in the Crimea. It's a big area of interest for the Russians.
Okay, so Putin and Russia stand to benefit from the price of oil spiking here. But is that offset by what we're seeing with the ruble and as well as the Russian stock market?
Yeah, I'm not sure overall this is a plus for Russia's economy. In fact, I think it's a negative. I mean, one of their big trading partners is Ukraine. If they start having problems there, that's going to be an issue for Russia. I mean, all these emerging markets are weak, and Russia's already been showing some of the weakest growth in years, less than 1%. And they're not predicting. They're fairly gloomy. Even the government's not predicting much growth over the next few years. So I think overall it's a negative for the Russian economy.
All right. The EU is trying to get Russia and Ukraine to engage in a dialogue, but they've also said that if talks fail, economic sanctions will come into place. What type of impact will those sanctions have, if any?
Well, I mean, Russia clearly depends on imports for a lot of the better consumer goods that it needs. But it's a big country. It's fairly, resourceful in terms of resources. But obviously, it's going to be a problem for a lot of the people who like to buy good Western goods, which obviously are not what the Russians make, but import a lot of. So it's going to create some pain on Russia and for a lot of the, let's say, upper middle class or upper income people.
All right, real quickly, I want to bring in former Congressman J.D. Hayworth, who's still with us here on set. Also, Jeff Yasteen, a financial editor with Newsmax. Guys, do you have any questions you'd like to ask Bob?
Let me go to Bob and take a look, a U.S.-centric look at what's happening in portions of the former USSR. Bob, we see now the energy prices going up since Putin's policy was to make Russia an energy leader throughout Europe. When do those price increases start to affect American markets as well?
Well, it's interesting. If you look at it, the price of oil has actually been creeping up over the last couple of months. So it didn't just go to $105 or $105 overnight. The price of gasoline has stayed relatively, flat, which has been interesting, partially because heating oil demand's at an all-time low, surprisingly, despite our cold winter. People have switched to natural gas for many years now. So I'm not sure it's going to affect the U.S. for a little while, because they're going to feel it in the pocket in gasoline prices, and we're really not seeing it. Now, I think that'll change at some point, but it's interesting how much crude oil's price has risen and not really affected price at the pump. Yeah.
Bob, yeah, it's Jeff Yasteen. One question for you. What do you make of the price of gold? It's up, what, $13.50 or so, I think today, up about 12, 13% so far year to date. Do you think this is just a fear trade reaction or indicative of something bigger?
I think it's indicative of something bigger because, again, gold, maybe like oil, has been trending upwards nicely for the last couple months already. I think this is just the kind of thing to get the, let's call them gold animal spirits going even further. This is the kind of problem with an emerging market. I know Russia's an unusual one, but it's just the kind of problem that's been pushing gold up now for a couple of months. So I think it's just going to further what's already been pretty good momentum for gold this year.
Now, Bob, it's been a long time since the Cold War ended, and in that time frame, we have these institutional investors now and people setting these stop-loss orders and things of that nature, these algorithms, these computers that can make these trades. Is that contributing here to the volatility that we're seeing so early on, so reactive in these markets?
Well, we've had a somewhat shaky start to the year. I mean, a lot of people thought stocks would be, just running forward. Frankly, myself, too. I thought stocks would have a pretty good run in January and February, and as we know, didn't quite happen that way. I think if there was set to be a pullback this year, it probably would have come later. The fact that it comes earlier tells me there is a little nervousness in the markets already, and something like Ukraine is just adding to that. But again, just like gold, I think the markets have been in getting to, back to where they were essentially at the beginning of the year. They really haven't gone that much higher.
All right, so gold is something we certainly have to take a look at, and focusing in here to explain what people are seeing on the screen a little bit. Those numbers are displayed there. That is a currency exchange in Moscow. We talked about the comparison between the ruble and the dollar. Definitely an adverse effect, the dollar gaining on the ruble right now. At what point does that set in? Of course, economics is so huge in all of this, and where Putin is coming from and his motivation here. If the Russian currency continues to decline at the pace that it has today, you would expect to see more reaction from inside Russia. Wouldn't you agree, Bob?
Yeah, well, certainly. I think they're already starting to try to raise rates. I mean, they're going to have to do what Turkey recently did and other countries, emerging markets, countries that have had their currencies fall. So they're going to have to raise interest rates, which is certainly going to be a negative for their economy, just as it's been for the other economies. But again, from a broader perspective, I mean, this is part of a general trend that's been happening for a couple of months now. It certainly could be made worse because of what Russia's doing, or Putin does more to rile things up. But it is part of a general trend that emerging markets have been troubled, not just the last few months, but really since last summer. And so it continues. Plus, remember, there is a fear Russian markets are what kicked off the big collapse in 1998 with long-term capital. So I'm sure some of that's on some people's minds as well.
Bob made mention by John earlier of the old Cold War days, and we think back 30 years to the height of the USSR. It was said the old Soviet economy can only do two things, make vodka and depend on American wheat for their situation there. Richard Nixon famously called the Soviet economy a basket case. Obviously, there have been huge changes economically, but in terms of agricultural issues, American wheat, other wheat worldwide, do those markets, perhaps restricted now from Russia, does this suddenly open things up for American trading again?
And Bob, you got about 30 seconds for your answer. We want to get to your book too, so go ahead.
I'll make that quick. Yeah, Ukraine is the breadbasket of the old Soviet Union. It's still one of the largest exporters of wheat in the world. If it obviously tends to go elsewhere than Russia, I think it does open up opportunities for us. But I think it's also going to just push up prices for grains in general, just that sort of uncertainty about what's going on there.
All right, there's Bob Wiedemer, author of the book Aftershock, also star of our Aftershock Survival Guide Summit. Great guy. Good to have you on the show, Bob.
Thank you, John.
All right, stay with us when we come right back after the break. We'll take a look at the winners and losers at the Oscars.